Hello and welcome to another episode of Monday Markets. As always, we're brought to you by Woo. Links available in the description below. Strong start for the market from Sunday all the way through Monday. So let's take a look at things. I will skip past the monthly time frame and focus on the weekly, daily, and the intraday. So not a lot has changed on the weekly. For me, there was a missed trade at 58.1 to 58.6, 58.7, which was this weekly kind of plausible higher low level that was discussed on Casual Friday and some other places. It was just a very simple case of I was hoping to see a test of this level and candle closes following it, or low time frame absorption patterns, entry techniques, whatever you want to call them. And the market just didn't trade there. And I've got enough stuff going on at the moment to where if I don't get the trades handed to me on a silver platter, especially in the context of just this entire consolidation, if it's not going to come to me, I'm okay with missing it. If you're trading more aggressively, or if you're monitoring these moves on lower time frames, you want to catch the daily and intraday rotations, let alone the weekly ones, then you have to have a backup plan for what happens if the market comes close and goes without you. But for me at this point, certainly within the context of this consolidation, if I'm not being gifted entries, I'm okay with missing them. Obviously, I'm human. It's a bit annoying for the market to come close and then just kind of shoot off without me. But at this point, after 7+ years, it's something I'm more than used to, and I'm completely fine with it. Where does that leave us with the weekly time frame? Well, I think there are two levels that are relevant, at least for a weekly show. One is the level we spoke about previously, which is the 64.2 weekly level. That ended up being a nice area of resistance during the week that gave us the push lower, even though the push lower didn't ultimately test support. It was still a useful inflection point to continue the Casual Friday meme. And that aside, the other interesting area is 68.2, which is the last kind of big lower high in this consolidation. And there is plausibly an interesting area around 66.5, only because it's a high time frame swing high. If we get a huge open interest increase and premium ramp up and a bunch of leverage chasing into this breakout, that could be a potential inflection point. Again, to continue the meme, I quite like the whole inflection point thing. In any case, it might be an interesting area for low time frame trading and a bit of a flush if the market gets a bit exuberant and hot going into that high. But on the weekly time frame, it's not really the biggest thing in the world. And realistically, when you're dealing with spike, flush, sweep type of setups, they're best done on much lower time frames because you need to see signals of urgency, and those signals are best interpreted either using not time-based charts, or using lower time frames if using time-based charts. So that's really it for the weekly, and obviously it's Monday, so there's plenty of time for the weekly to unfold. I will say that for me personally, especially given I was unfilled at 58.17, I'm not a huge fan of chasing into Monday. Sometimes you get a really strong start off of Monday and it just continues trending. And certainly this thing hasn't given back its gains yet. And it's cleared this daily high time frame 64.2 by a decent margin. But that's the kind of thing where if I see a strong move on Monday, even if I have a bullish bias, I'm usually going to wait for Tuesday to either get a shallow pullback or to play the daily open if I really want a piece of it. And it works both ways, right? So if Monday is a sort of, Monday starts on Sunday and it just starts nuking straight away, I'll typically have the weekly open mapped out and I'll try to do business at least in that direction, if not higher, if I've got a corresponding directional bias. And the same applies in the other direction. Even if it's not all the way to the weekly open, even if it's not the entire move retraced, I generally don't like to play continuation on Tuesday if Sunday, Monday is a strong move, and I look for a bit of a pullback, even if I'm overall aligned with the direction the chart is pointing, or the direction of the Monday move, so to speak. Other relevant commentary on the daily time frame, the answer is not much. If you look at what we've done here, we've exclusively derived these levels from the weekly time frame, and they're pretty much picture perfect on the daily as well, right? So the weekly range high is the daily range high at 68.2. We have previous week's high as this big daily swing point at 66.5. The breakout level sort of resistance, turn support to resistance, inflection point meme is 64.2. And the big higher low support level is 58.1, 58.7. All these time frames are completely valid on the daily time frame, and I don't see anything else on the daily that makes me say, oh, look, well, this is a wonderful level, but the weekly hasn't captured it, so let me add it here. There's no point in adding superfluous levels to your chart, or levels that overlap with other time frames. You're just going to make things more complicated and add clutter. So for me, if the weekly levels are good on the daily, I'm not going to go out of my way to add extra color on the daily. That's really it for BTC. So with the comments earlier in mind, the only interesting setups for this week would be either some form of pullback, not necessarily into 64.2, because I don't want to give back so much of Monday. It would be okay, because that would still be support, especially if we close the day above it. But if there are any pullbacks as a result of this weekend plus Monday strength, either shallow pullbacks that turn into consolidations that get sold before a pop-up, or very sharp but quick pullbacks that retrace close to the daily level and bounce from there. I think those are very interesting. Again, the overarching idea there is that this is a big daily level. We already had one fake out, and just to be consistent, I've argued previously when we were below the level that a second fake out is less likely. Now, those odds are skewed slightly by the fact that it's taking place on Sunday, Monday, but the setup is still the setup on the daily time frame, right? Which is to say that I think this close is more likely to be a real breakout than not. So out of respect for that probability, I'm willing to give it a chance in either shallow pullbacks or very quick pullbacks level itself. Realistically, if it just keeps marching higher from here, if you want a piece of it on the long side, you'll have to be a breakout trader in one form or another. And that usually involves lower time frames. And I think one of the only bets that you'll be able to make in that scenario, if you don't get the shallow pullback, if you don't get the deeper pullback and it just keeps marching up, your best bet is that someone does business at really bad prices around the swing high and executes some very sloppy looking market orders or fresh longs that end up getting liquidated, and you get a low time frame spike, right? Low time frame pullback as those breakout longs get pressured, and that would be your best chance to look for the range high and maybe higher if the market looks strong. So that's kind of what that decision tree looks like for me this week. If Tuesday is weak, shallow pullbacks or deeper pullbacks up to and including 64.1, 64.2 are okay, because the daily time frame looks like it's breaking out of this double fake out looking thing or single fake out looking thing. If the market just keeps going up, I'm going to hope someone makes a mistake. And where could they potentially make a mistake? I think through 66.5, 67k, any kind of blow ups there, anyone in the market getting too hot and low time frame pullbacks as a result would be more appropriate. Obviously, there's a time frame difference here. If Tuesday shows some weakness and the market is more generous and moves more slowly, then Tuesday, Wednesday, whether it's a pullback to level or a shallow consolidation, you can engage with that on medium to high time frames and still playing the idea of this being a larger breakout. However, if the market just keeps going up, you will most likely be locked out of using the high time frames to get a piece of continuation for an entry, and instead you'll have to be on the 1 to 5 to 15 minute, probably around this high and above it, to see if anyone blows up on the long side, or some sort of top buyers on in a very local sense, where there's like a 3-4% flush intraday, and that'll kind of open interest wipe liquidations from the latest bulls in the entire trend, and you'll be able to hopefully scoop up their coins before the push higher if it plays out that way. Obviously, if this thing what would need to happen for this thing to start looking bad? Well, for BTC, the answer's been nothing. A lot of these breakouts and moves higher have just resulted in us being in the same range for like 7 months. But realistically, from a weekly show, somewhat helpful technical perspective, I think trading back below 64.2 would, for me at least, would create a no trading back to chop type of signal. So that's both the inflection point and, by definition, the invalidation as well, which is quite nice, because doing business close to where you're wrong means you don't spend a lot of time pissing about. You either find out you're right and you have your entry and there's fuck all else to do, or you find out you're wrong very quickly and you move on with your life. None of this diddle in the middle ambiguity. I don't think there's anything else that's particularly useful to add on the BTC front. Not a huge fan of chasing into Monday. I'd rather play Tuesday, Wednesday if it sets up. If not, boohoo. This was realistically the last high time frame trade that would have been attractive, and it didn't happen, but sometimes that's just how it goes. Let's talk about ETH briefly. ETH BTC is up very slightly today. And also, just for posterity, these are essentially the charts that we had from last week, and not much to add to those either. You can add the high if you want. Previous week's high, this big swing high at 66.5, and then 68.2 as the daily level. But no, daily level. No other additions there, for me at least. On the ETH front, I think it's just a generally slightly choppier chart to trade than BTC. Realistically, the only interesting area for this would be trading back into the former range high-ish at 2.7. But if you get to 2.7, I mean, realistically, you might as well play this big 2.8 to 3K to use the meme once again. Not that it's stale by any means. Inflection point. It's not really 3K as much as this 2.8, 2.9, but really this has been ETH. Trending moves on this thing has been absolute nightmare. Looks like it's going to break out, goes back down, looks like it's going to break down, goes back up. So if you've been sort of chasing the breaks on this thing, it's been categorically miserable. But I think the first area where it might make sense to do that is 2.9k plus, because I mean there's this entire very inefficient breakdown through it. It's the most standout area on the chart, so on and so forth. It is obviously resistance for the time being, but 2.8, 2.9k plus is probably the level where if you bet and you feel you're wrong, you shouldn't feel bad about it. I generally think that's a useful trade filter to have, which is to say that if I take this trade and I look back on it in 1 day, 5 days, a week, a month, etc., will I feel like a dickhead if I'm wrong, or will I say, oh, okay, fair enough, I get it? And hopefully most of your trades should be in the, yeah, fair enough, I get it, or I would take that again category. You don't want to feel like a dick if you get stopped out, right? So for some people, if they're self-reflective enough, that works as a method of ascertaining whether they're taking high quality setups. For other people, it doesn't. I find it quite helpful. Maybe it works for you, maybe it doesn't. I don't have any other particularly helpful low time frame commentary for ETH. If you were to put a gun to my head and ask me for an intraday level, I would say, why are you doing this? It's TA, it's not that deep, bro. But then I would probably say 2.5, because if we just expand this level and sort of look at it, it's very self-evident as an intraday inflection point, right? Highs here, bunch of lows, highs, lows. I mean, this is as levelly as it gets. So if you're really grasping for some sort of lower time frame TA level, I'd say 2.5 is the inflection point there. As far as altcoins go, it's just mostly been hasn't really been particularly narrative driven. Like lots of altcoin strength and outperformers continuing to outperform. Sui, Whiff, Popcat, Slurf, I think. A couple of others. Pepe's been strong as well. FTM today on a bit of a rip, although the chart is slightly less clean. This is on my watch list simply because sort of large Twitter mindshare for the time being. And if market conditions are good, then large Twitter mindshare also has a positive impact, or disproportionately positive one, on the market and the price. I just think there's like a 36, 37 cent level there where we've spent quite a lot of time in this consolidation, and if it's going to break out, then you'd want to probably give this thing a chance, just because there's a lot of space for these kind of cyclical type of setups. This isn't my roadmap by any means, I don't trade like that, but CT mindshare plus relatively new coin and strong performance recently, I think it's worth at least outlining the breakout level to see what it looks like, and it looks the same on intraday timeframes as well, which makes it quite nice to trade. Popcat, what have I got for Popcat? I mean, I told the anecdote on Casual Friday that I looked at this thing at 114-ish when it was right at the range low and thought I should just buy some for a bounce. And I was logged out of my exchange and I couldn't be bothered to log back on and had some other work to do. So obviously the next thing it proceeded to do was to rip up 30%, just another day in Cred's life. Realistically, this is just, again, very strong meme coin that's been marching up and is in all-time high territory, so you should just assume it's strong until it gives you very strong reasons not to think so. Which raises the question, if it's at all-time high and doing all this kind of stuff, where are the levels? I think you have to make do with what the market offers, which is to say you're not going to be finding large pullback levels on the daily, and if you do, then they're not going to be the best levels, or you don't want them to be retested in the first place. I think the 4-hour chart does a decent job of mapping this out, at least for the next week. If we take kind of highest close, lowest close in this consolidation, using sort of more recent price action. Actually, I will do this using this high and this low for our boundaries. So it would look something like this, right? Lowest close, there we go. This is what we'd be working with, right? So we had a bit of an overshoot to the range high. The midpoint is at 130, range low is at 115. If you want a piece of Popcat, I think that would be an appropriate roadmap. And again, I'll keep harping on about this point because I think it's genuinely quite useful. If you want a good test to see whether your levels make any sense, start on the higher time frame and see how they look/react on the lower time frames. If they look crappy and unresponsive on lower time frames, then you probably made a mistake on the higher time frames. If you discover that your high time frame levels look great and are levels in and of themselves on lower time frames and are generally quite responsive, that's a good sign that you're at least in the right neighborhood, right? So that's kind of the Popcat roadmap there, if you will, or at least relevant trading levels for trading week. Sui, similar all-time high, outperformer strength type of thing. Bit pullbacky today. I don't really love the intraday structure on this, where it is right now. I think there was a decent kind of breakout cluster formed here. I'd simply use this as the most nearby inflection point and or invalidation, 215-ish. If any of that starts to break, I'll just not be a huge fan of it. It would make the 4-hour chart start to look bad below 210, 215. And when you're dealing with strong trends, now that especially since you've had, an attempt at a breakdown that didn't hold the retest level and it just shot back up, the next support resistance flip, in theory, if the trend is strong, should be clean. So that should do it. If the market is strong, 210, 215. If not, then I would just let this thing go and look at other things. And whiff is the last one. This one's a bit scary, at least from a fresh trading perspective, because it's all the way back at its breakout/inflection point. So you could either take a brain dead approach of taking a punt on the daily close above and hoping that you're not the deviation wick, or alternatively, as with many of these altcoins, you have to, if you want a piece of them, beg for either weird, idiosyncratic, selling, profit-taking, whatever, to give you an entry. So strong stuff suddenly being weak, but for short-term reasons, or you have to beg for a correlated pullback, which is to say that the coin looks really strong, but it's down because BTC is down, so it's a great opportunity to take an entry on that type of thing. In terms of technical levels, where that might fall back, it's a bit more difficult given where we are on the daily. But if it's strong, then pullback should only be shallow, maybe 250-ish. And that's kind of your intraday range low and daily level. That's probably the closest levels that make sense. And again, most of the time with altcoins that are trending, I'm only looking to, if I'm going to do business, I want to do it somewhat close to the market, because if it gives back too much, I'm just going to get away from the low time frame charts and either step away entirely or look for high time frame entries. So in this case, it's either daily time frame brainless 2.8, 2.9 plus, and hope that you're not the wick or the deviation, or you're hoping for one of those weird profit-taking candles, random weakness candles, correlated pullback candles that take you into an intraday level of support, which I think is 250-ish for with on most time frames. On the leverage front, just to wrap up very quickly, I think the only argument that, hold on, where are we? Yeah, so I mean, quarterly basis has crept up a little bit, nothing too crazy relative to the price performance, but I mean, it is quite a jump, almost to double-digit basis. Perps are not particularly hot, and we've seen this. Well, they're certainly elevated a little bit, but nothing like outrageous compared to what we've seen in the past. And there've also been weird dynamics where funding has been a bit noisier than usual in terms of, oh, look at the premium, look at the discount, because there have been a bunch of spot sellers in the market. And obviously when spot sells, if the spot price starts trading below, if the perp starts trading below the index, which is made up of spot, you'd ordinarily think, oh, look, perps are so bearish, so on and so forth. But sometimes when you get spot selling, that can create a very strange funding rate interpretation that might not be usual. So what I mean by that is, consider the following. So you have index, which is made up of spot, and then you have the perp price as well. And funding is a derivative of these two things. If the perp is below the index price, then funding is negative. If the perp is above the index price, then funding is positive. But sometimes what you'll get is, as a result of spot selling, the perp ends up trading higher. So you think, oh, funding is so high and that's very bad, or there are healthy longs in the market or whatever. You sort of interpret high funding as perp bullish aggression, but it can actually be a product of spot selling more aggressively than perps. That's kind of what makes this thing noisy from time to time. The only other relevant metric on this is, if you want to really get into meme territory, open interest resistance. How about that, right? We can pull all everything out of the bag of tricks. This sort of ended up being a meme at some point, but periodically becomes different, or certainly you'd want to see a new paradigm shift for it to be different. And that is to say that if we look at aggregated open interest, things tend to get a bit sweaty recently around the 13.3, 13.56, whatever billion type of level. It's very rare, at least recently, for the market to be able to sustain above those levels of open interest. Obviously, there's one long for every short and so on and so forth. But in general, like super high open interest doesn't, at least in this range, hasn't been super sustainable. So the argument for a breakout would have to be that, look, we have a we have higher open interest, but the market is able to sustain it, right? This kind of entered a new paradigm where we're not range-bound chop anymore, where every time we touch this level of leverage in the system, open positions in the system, we nuke. You'd need to come up with a new paradigm argument, essentially, that, yeah, okay, open interest is much higher than it was during this entire consolidation, but that's justified by the fact that the consolidation is breaking, or macro is bullish, or whatever. But that's just one thing to keep an eye on, and obviously it's not the most useful indicator in the world, because, I mean, this thing can definitely, as it has in the past, overshoot. That's just more something to eyeball on the perp side. As far as futures go, I think the interesting indicators is Adam from Trading Right has pointed out, most of them, which is altcoin perp volume relative to BTC, global open interest, and, I mean, for me, still quarterly futures also quite relevant. I don't have enough time to go into the full quarterly futures and premiums and funding stuff. We can probably do that on another episode. And also, I'm pretty sure I butchered the whole index price and perp price explanation. I can probably do a deeper dive on that when I've actually prepared a little bit of content for it, not just spouting off. But just one thing to consider when it comes to funding is that it's not just perps dictating everything. You know, if funding is positive, it's not, the explanation doesn't always lie in perps being bullish. If funding is negative, it doesn't always lie, the explanation doesn't always lie in perps being very bearish or negative, because spot can and does push this market around, and so it can create the illusion of perp strength or perp weakness, when in reality spot is in the driving seat. And there are some ways to look for that as well, but again, all content for a future video. I'm going to shut up now. Hope you'll have a wonderful Monday. You can upload this before it turns into Tuesday, in my time zone at least. Thank you to Woo for supporting the show. Their social trading is really kicking off, so be sure to check that out if it's of interest, or if you just want to trade perps in a jurisdiction that's not restricted. Please check them out, and there's a link in the description if you want to support the show. Have a wonderful life, and I will see you on Friday. Yeah, Friday. Bye-bye.